Welcome to the Without the Bank podcast, where you and I are going to talk about all things IBC, the business of banking, utilizing money correctly, and how this will help you grow your business and your wealth. All right, folks, today we are going to talk about how banks make money. No fluff, straight up lesson on what the banks are doing to make money. Because besides hospitals, churches, and liquor stores, who else has a new building on every single corner? And hospitals don't even have that nice of buildings. Look at these buildings, my friends. They are like all glass, rock, brick. Brick is not super expensive in the South, apparently. It's almost impossible to find a mason up here. Another trade business that people are losing interest in. But it's almost impossible to find a mason up here. And so it's super expensive to have stuff like that done. But nonetheless, these banks are just making a ton of money. And how are they doing it? And when was the last time you asked, why am I not in the business of banking? Right? How come we don't ask that question? I had never, until I was introduced to the infinite banking concept, I had never walked into a bank and said, how do they make money? No, instead, I was asking, how do I make a better rate of return in my investments? What is wrong with us? How are these banks making money? How are they building all these new branches? Why are they building all these new branches? Right? And so, have y'all heard of this little thing called fractional reserve banking? Now, you guys can look, and some people might go, oh, you are, Mary Jo, you are a conspiracy theorist. Oh, just go to YouTube and search fractional reserve banking, and you'll get some really good videos that show you exactly what's going on. And let me tell you briefly about what's going on. The banks take your money and lend it either back to you with an interest rate or to other people. And they turn that money 10 times. What that means is that when you put $1 into the bank, they can go to the Federal Reserve, and the Federal Reserve will say, oh, good job, Mr. Bank. I'm going to give you $10, of which you need to keep $1. The other $9 you may lend out to another patron of the bank. And I'm going to lend you these other dollars at maybe 0.25% interest. And you then may lend them at 2%, 3%, 5%, 6%, 7%, whatever percent the bank wants to put on it, right? I'm sure there's some sort of regulation, but I honestly don't know about that. So the bank is getting money from the feds to lend to you that didn't really exist. Because you gave them $1, and then when I came in, they didn't give me your dollar at 3%. They gave me $9, of which didn't even exist. Nobody deposited that. The Federal Reserve put a little note on a ledger and said, here we go, we got more money in circulation that really wasn't money. It's called fiat money. It's fake. Today, it's just digital money. And it is driving down the value of our dollar because the banks keep turning it. What? I did not know that. I had no idea. And so when these banks build new locations, why? Because if they're handy, guess what? They can lend more money to more people, which means if you lend more money, guess what happens? They have to pay you back. So I made money off the interest, and then I made $1 back. So now I can go turn more money. And this is one thing that I really want you savers to think about. And I see this a lot. we have money sitting in a savings account. Let's say that we've got $40,000 in savings or our checking account, and we go to the bank and we borrow money. We borrow $40,000 at 3%, 4% for a new vehicle. So we're going to borrow $40,000 at 4% from the bank when they pretty much lent us our own money back. They paid us 0.0000004%. Okay, it's not that bad. They paid us a measly 0.04%, and then we paid them 4%. Would have we been better off to use the money in our savings account and pay ourselves back 4%? I talked about this in the Be an Honest Banker podcast, right? But the bank just made interest money. Why are we doing that? Is that okay? It is absolutely crazy, you guys, that we don't understand our own banking system. And the fact that the Federal Reserve is not even federally owned, it is a private held entity. If you guys are looking to do some research along with fractional reserve banking, you might want to read the book Creatures from Jekyll Island. There's shorter versions, and you can actually see it on YouTube. There is a recording of it on YouTube, apparently. So you could probably speed that up, or maybe it's on Audible. I've not checked. But it really goes into who owns the Federal Reserve. And it is the elite of this country. It is not the bank owners per se. It is a central banking system that controls our dollar. And they just keep on printing those dollars, devaluing our dollar. Devaluing the dollar because there's so many in circulation, not backed by anything. So when your Oreos go up in price because there's so many dollars, they don't really have a value, you can't be mad at Walmart. That's silly. It's not Walmart's fault the package of Oreos got smaller and the price got higher. It's the fact that there's so many dollars, they're not worth anything. So now we need more of them to buy that package of Oreos. And many people think, oh, that poor bank. They do not deserve, they're only getting 2% on our money. Or 3.5% at the time I'm recording this, 2.5% is a conventional mortgage rate. So that poor bank, they're not making any money. They're only making 6%. If they lend you money or if they're paying you 0.5% in savings and they lend it to you at 6.5%, that's only a 6% spread, right? They only made 6%. Well, in the 80s, if they were paying you 16% on savings and they were charging you 22%, that's a 6% spread. Oh, wait though. 16% to 22% is a 37.5% markup. So if you bought a hammer for $16 and sold it for $22, you increase the price of that hammer 37.5%. The banks increase the price of their money 37.5%, right? If they were getting money from the feds at 16% and then lending it to you, they made 37.5%. Today, they're getting money from the feds at 0.5%-ish. And if they lend it to you at 6.5%, guess what? A 1,200% markup. Same spread, smaller numbers. So now if you went and bought a hammer for 50 cents and sold it for $6.50, you just marked that hammer up 1,200%. Huge. Huge, huge, huge. Why would interest rates need to come back up? The banks are making more money with low interest rates. Now, let's say that they're paying you this 0.00 or this 0.04% in your savings account, and then you have this $40,000 in savings, right? So they're giving you 0.04% in savings, but then they lend it to you at, let's just say, 2.5 for a house. That is a 6,150% markup. Holy moly, those poor banks. And when we do business with the bank, we are in business with the bank. They have control. They use whatever it is we bought as collateral, or they'll take something else as collateral. They have to have something for collateral. So in case we default on that loan, they can come get something. I would do the same thing if I was a bank. I'm not going to just freely lend money, and I'm not going to blame them for that. But when we look at spreads like this, and we understand how they make money and why they have a new building on every corner, why are we not thinking, how can I get into that business? How fast can I get started? We will go chase every other opportunity that is a get-rich-quick scheme, right? But we look at this and go, okay, just here's my check. I'm going to deposit it. Look at there, they built a new branch for me on the way home, and it is just that much more convenient. Oh, those employees are so super nice. They lend me money whenever I want it. I don't really have any problems with them. No, I don't have any problems with them either. And there's less problems if you have to use them. But they're ultimately in control. The second that you sign the dotted line, my friends, you are in business with the bank. They get to call the shots. And people will say, well, Mary Jo, I have power. I have power. I tell them I'm taking my business elsewhere. And I am a big part of their making money. So they don't want to see me go. Until they don't care, right? It's a two-way street to an extent. I had somebody tell me, Mary Jo, I just call them and they just put money in my account. If I need it to run my business, they just transfer that money there. Until they don't. Because guess what? Your banker is a super nice person. The person that did the lending for your house, the person that did your business loan, the person that did your HELOC and your car loan and your boat loan and your camper loan, those are all very nice people. But they don't have any control. The board of the bank has the control. They get to go there. If you're doing a conventional mortgage, guess what? Your banker doesn't have control. Fannie Mae does. Whoever they sell it off to has all these idiotic questions for business owners because they don't understand how business works. It's super frustrating as a business owner to try to go get a loan because nobody understands how you get paid. Because they've probably never run a business a day in their life. They come in and collect a paycheck and do what the board tells them to do. It's not their fault if things don't go through. Why are we subjecting ourselves to this? Why are we not asking, how do I become the banker? And why haven't I thought of that before? Because we haven't had enough pain, like I talked about in the last podcast, right? Until there's pain, we don't do anything about it. Folks, that's how banks make money. And guess what? I'll go over this in another podcast, but the big banks basically use the infinite banking concept. It's called bank-owned life insurance. More good insider information about what banks know that we don't know. You need to be in two businesses, the one that you make money at and the banking business. You need to finance your own business. You need to start a bank that doesn't turn money, that doesn't devalue our dollar. When Nelson started the infinite banking concept, he was an Austrian economist. They don't believe in inflating dollars and turning money. What kind of sound money system would we have if we just quit printing money that didn't exist? Be huge. How about we quit spending money we don't have? Huge. We could maybe play a small part in that if we quit using the banks. And it doesn't happen overnight, my friends. You are going to say, oh, but Mary Jo, I want to do it tomorrow. They make me so mad. I get it. But we can't do it overnight. This is not a get-rich-quick scheme at all. This is a lifelong mission. It took Nelson 13 years to get out of the banking system after he inherited all that debt. 13 years. Most people don't have that kind of patience. They'd have just filed bankruptcy and said, all right, we're done. Let's start over. Figure out what banks are doing and let's do it and let's get started. Google, fractional reserve banking. YouTube, fractional reserve banking. Listen to Creatures from Jekyll Island. Do your research on banks and how they work. Most people that work in banks have absolutely no idea that this is what's happening. None whatsoever. We need to start asking these harder questions and start thinking about what's really going on and paying attention to the biggest portion of our money that goes through our hands, not the little bit that we're saving. If you've not read the book, Life Without the Bank, please go to withoutthebank.com, grab the book. You can get it in a bundle with Nelson's book, read it, and then I'm happy to talk to you. And you let me know at maryjo@withoutthebank.com if you have questions, comments, concerns. I am here and happy to answer them. But until the next podcast, have a fantastic day.